you do SIPs. I have explained multiple techniques on this video. Please watch it carefully, make notes. It will help you a lot in terms of improving your ROI from stock investing, from mutual fund investing, you name it. So I hope you enjoyed this video. Let's move on to the main part. Hi everyone, welcome to today's video. So when I started making my first salary, I had no clue about investing. So I chose the best possible path for me, which is mutual funds. And आप में से कई सारे लोग would have taken the same path. I had a mutual fund advisor friend. He said that, Akshat, your money just keeps on lying in like FDs. Why don't you go and invest in mutual funds? I thought, think about that, right? And mutual fund is safe, this, that. So I went ahead with that option. Now, what I did not know was that mutual fund comes in different shape and sizes. One categorization of mutual fund is called as direct plan, and there is a regular plan. So regular plan mein you go through a mutual fund advisor / distributor, which was my friend. So since I went through him, I had inadvertently, unknowingly picked a mutual fund, which was a regular option. Now in this, there are higher commissions. And for 2 years, I continued to pay high commissions unnecessarily, and I lost a lot of money. Also, folks, none of these points will matter if you're not safeguarding yourself and your family. And in order to do that, you need a health insurance. The insurance cost, especially the healthcare insurance cost in India, is going up by 14%, 14%. This is highest in the Asian countries. So from that perspective, please safeguard, please have an health insurance, which brings us to the sponsors of today's video, which is Ditto Insurance. They are a spam-free platform. You can go and speak with an insurance expert to understand what type of health insurance you would need. So I am linking all the information in the description and comment box. Now, the point is that many people are salaried class, right? We are too busy with our jobs. We don't know how to invest. Someone tells us that do this, we end up doing that. So to cut the long story short, we end up making a lot of mistakes that cost us very dearly. On top of that, if you're just starting out your salary, you might be too focused on your work. You might be focused on skill improvement, वगैरह वगैरह. 100 चीजें चलती रहती हैं, right? Where will you learn about investing? All that stuff. So on this video, I'm going to consolidate 8-10 points. Very simple language I'll use. If you apply these 8-10 points, you are going to get a much higher ROI on the salary investments that you are making. So let's kickstart the video. And also a very humble request that please like this video, simply because of the reason that it would allow these type of videos reach out to more people who are struggling with their everyday job and bunch of dunya bhar ki problems, making a lot of mistake with their salary, paying such high taxes, help them upscale their finance journey by making better investment choices. I know that you haven't pressed the like button. Please pause the video, please press the like button, and we will get started. So okay, here is a basic rule, and this is a snippet that was provided by someone. So it's a very good snippet, and ye aapko mota mota bata degi that what is the average return that you typically get. Moti math, that how much average return you get across different asset class. For example, if you simply go and do a fixed deposit, you will make roughly around 6%. Now you say yaar mere ko IDFC First Bank mein itna milta. Yes, net. I am just helping you develop an overarching thesis here. So we are not nitpicking. Okay. So if you go to FDs, you are going to make 6%. If you go to government bonds or government schemes, you will roughly make 8-9%. For example, Sukanya Samriddhi Yojana is run by the government. Approximate return aata hai usme 8-8.5%. Then if you go to gold, real estate, then typical return is 10%. ऊपर नीचे हो सकता है depending on the type of real estate, when exactly you are buying gold, all that stuff. If you buy Nifty 50, then the typical 20 years CAGR on Nifty 50 has been 12%. Nifty 50 means overall return of the market. Then you have good stocks. So if you buy like consistent compounders type, then आपने HUL खरीद लिया, HDFC Bank खरीद लिया at a decent valuation, and if you are able to manage the volatility, then you're likely to make somewhere around 15%. And if you pick good fund managers, for example, if you pick a good mutual fund, good PMS, if you are able to manage your portfolio really well, then it can easily be 18% plus. So yes, there can be 1-2 point difference here and there, but net, this is a good summarization of the target return that we stand to make if we move across these different strategies of investing. So with that spirit in mind, let us start discussing some salient points and what investment mistakes you should avoid making if you are on a salary. So mistake number 1 is that we look for extreme safety. Now, what is the meaning of extreme safety? Extreme safety का मतलब होता है fixed deposits. Now, there is a very wrong notion that is going on in the market कि FD में आपको कभी निवेश नहीं करना चाहिए. You should never invest in FDs. No. the viewpoint needs to be slightly more nuanced. So regarding FDs, you must understand 3 sub-points. So the first key sub-point is the risk-free rate of return. Now, what is the meaning of risk-free rate of return? मैं आपको एक example से बताता हूँ. For example, many a times you would have heard that Nifty or the entire equity market on an average gives 12%. But have you ever thought where this 12% comes from? Well, it has 2 components. One is the risk-free component, right? And one is the risky component, right? So for example, generally, you would have heard that prices typically go up every single year. जैसे आलू प्याज टमाटर whatever you are buying, it will anyways go up like on an average 5-6% a year. So that is inflation in the economy. So at least आपका ये तो risk free return होना चाहिए ना, right? So this is like basic inflation. So this 12% number, at least half of it comes from where? Half of it comes from inflation itself, and remainder 6 is the risk premium that you are getting because you are investing in a slightly more risky instrument like Nifty 50, which comprises of equities, right? So I hope this point is clear that 6% is risk free in a way, and 6% is the risk premium that you are getting. Now see, if you are just simply going and depositing your money in fixed deposit, what are you essentially putting your money behind? Well, you are just blocking this part out कि बहुत ज़्यादा आपको मिल गया return, so that will be inflation return. That's it, right? So FD is just a tool to somewhat benchmark yourself around inflation. So let's say that the current FD returns are somewhere around 7%. You are getting 7% because of the fact that inflation itself will be higher than 7%, right? बहुत ही rare cases में मिलेगा that FD actually matches whatever the inflation in the economy is. Now, many people will argue with me that no, inflation is like 6% right now, 5.5% right now. Agree, but that is a stated and quoted official rate of inflation. Please don't go by that. The real rate of inflation in the economy, according to me, will at least be 11%, 11 to 12%. That is the inflation that you should assume, especially if you are in the middle class. आप hospital bill देख लो, आप education bill देख लो, आप घर के रहने का खर्चा देख लो. Look at anything. You yourself will be able to ascertain that post 2020 till 2023, 3 साल हो चुके हैं. आप calculate कर लो, right? इतनी 10% every year would have been the increase. That is the real inflation that you should understand. So in that spirit, if you're just simply putting your money in FD blindly, कि कुछ भी हो जाए मैं तो FD में ही करूंगा. So in such a scenario, your capital is not growing and you are working your way to poverty, because in real terms, every year, whatever money you work hard, you put it in bank, that will keep on losing value. So this is part A. Part 2 is the fact that it's not as if that FDs are bad all the time. For example, there is something called as the base interest rate, and that is decided by repo rate in India. So in simple words, if the interest rates in the economy are almost at their highest temporary level, I'll repeat that statement, almost at their highest temporary level, then that is probably a good time to lock in your FDs for 2-3 years, right? At least आप इतनी की FD करा लो and be cool with it. Now, why is that the case? Because you can deposit that money from a safety perspective. That whatever safe money you require, just lock it in an FD. That becomes your safe money, and that will continue to give you highest possible interest rate for the next 2-3 years based on a safe instrument. Now take a look at that. These are the interest rates in the Indian economy right now. I will show you the last 5-10 year history here. You will categorically see that in the last 5-10 years, the interest rates are fairly high as of now. So we are almost at that temporary level where the interest rates are fairly high. So good time to do FD from that perspective. After this, the interest rates are likely to be cut. But if you have blocked your money for 2-3 years, then that safe money is sensible for you. So I hope you got the perspective of doing FD. If you want to save maybe like 10%, 20% of your salary in safe money, and if you don't have a safe money bucket category, then you can definitely consider doing some FD. So this is point 1. The key takeaway here is that if you are making your salary and aage chalke if interest rate gets cut, then please put your money not in FDs, but in slightly more growth-oriented instrument. Now, this is a point that many people understand, many salaried class people understand. But their point is, यार अच्छा growth में पैसा डालना है तो mutual fund सही है, right? This is a tagline that I keep on hearing. So they will go and buy every random mutual fund. This is the second key mistake that you will make as a salaried employee. That please do not go and buy random mutual funds. I have made a lot of videos, so probably you can go check out the list, which are good mutual funds, bad mutual funds, all that stuff. But from a macro point of view, 68% of active mutual fund managers do not beat Nifty 50 or the benchmark returns. If benchmark returns are 12%, then 68% of mutual fund manager will make much less money. On top of that, if you are investing in Nifty 50, which are considered to be like gold mark of safety when it comes to equity investing. Then the commissions are also lower compared to like what you are paying active mutual fund managers. So this is a very important point, because when we start investing, we typically buy like large cap mutual funds actively managed. मतलब नहीं है, right? There is like hardly any use in terms of paying so much commission there. You are much better off just simply putting your money in Nifty 50. Now there was a very interesting tweet that was done by Shankar Sharma. So Shankar Sharma is a very celebrated investor in India. So he was targeting like some PMS guy. I'll not name them. You guys can name which PMS person he was speaking about. So he was saying that, you know what, I can't understand clients who pay their fund managers fees to buy HDFC Bank, HUL, Nestle, Kotak, Britannia, Page Industries, etc. And he's 100% right. Why would you pay your mutual fund manager to buy these blue chip companies, right? It just makes no sense. It just decreases your return. So if you're on a salary, please don't make this mistake. This is a very important point. So just to recap, 2-3 points. Number one, please don't buy blue chip mutual funds. I'm not saying blue chip stocks mat kharido, but avoid buying blue chip mutual funds. Blue chip stocks you can buy directly when they have fallen. For example, right now HDFC Bank is at a good level. You can directly go and buy it. Why unnecessarily pay your mutual fund manager money and commissions for that? So this is like basic stuff that you must understand. Number two, if you're looking to buy, yaar, meko dar lagta hai, I don't want to invest, put money like risky. Equity itself is risky. So why should I put money there? So okay, so just simply go and buy Nifty 50. You will do much better than actively manage large cap mutual funds, right? So this is point two. Point number three, let's see, some portion of your investment. For example, let's say that you are every month you are investing, let's say 10,000 rupees, right? So 80% of it you can put in blue chip categories, right? So here 20% of it, start taking little bit risk with that. And here you can simply go and buy mutual funds on small and mid caps. If you are picking a mutual fund in the small mid-cap category, it still makes sense, because at least fund manager को कुछ मेहनत तो करनी पड़ती है. At least that person is doing some research, trying to find out what good small cap, mid cap is, putting some effort. With HDFC Bank, do you need like assurance from a mutual fund manager to tell you if HDFC Bank is clean or not, right? So that's a simple point, that if you are doing mutual fund investing via small mid cap, still makes sense, but large blue chip mutual funds, it makes 0 points. So then comes the third related point, that for example, I know a lot of my friends, they are earning really well. They are very busy with their jobs. नहीं आता उनको इन्वेस्ट करना, but they are sitting on huge corpus. So अब क्या करें, right? So in that respect, they think, यार Akshat, you know what, I will go and invest via a PMS. So PMS in very simple words means that people who want to put like large chunks of money. So some PMSs have at least a ticket size of 50 lakhs. कि जब आपके पास 50 लाख हो तब आना, वरना शक्ल मत दिखाओ. So that is what many PMS schemes say. And since these PMSs are slightly more selective in terms of picking their clients think यार, you know what, कुछ मान काम कर रहे होंगे ये PMS वाले, and therefore मुझे तो करना है इनके साथ invest, right? So okay, so let's look at the data. So here is the data of how PMS schemes perform in relation to mutual funds. So here only 40% of PMS, so this is in percentage terms, that only 40% PMS have beaten mutual fund. So 60% large cap mutual funds have beaten like large cap PMSs. Mid cap में और भी बुरी performance, small cap में 53, right? So here small cap somewhat still makes sense, but in majority of the categories you will see that the PMS guys are actually losing the war, right, on a 3-year, 1-year, 5-year category basis. So you can make the decision according to you. So just blindly trusting PMS guys might not make sense. On top of that, PMS funds have a higher commissions. So typically they charge 2%. That is almost the maximum that could be charged on a mutual fund. So please remember that. आपको लगेगा कि 2% से तो क्या ही होता है. Think about it this way, that in a market, that how much market returns have given in the last 1 year. So let's say 100 से 110 हो गया, right? So 10%, right? Now 2% is the AUM, asset under management. That is almost like 20% of your profits, right? So please don't think that this 2% is very less. This is a very high amount. So the next point is that many salaried people, sometimes they become like highly adventurous. बहुत पैसा है, we are going to like invest here, there, everywhere, this, that. Okay. So in that respect, please understand the point that please do not invest in something that you don't understand. Okay, now this is a Warren Buffett quote, and then many people are like, you know, मेरे को तो कुछ समझ में नहीं आता, I don't understand anything. So should I not invest in anything? No, please understand and build like simple rules, right? It's not as if that you need a PhD in finance to invest sensibly. So see, let me give you an example of a market instrument that is gaining a lot of popularity in India. So this is called as REITs, right? So REITs in very simple word means that, for example, if you are going and buying a villa or a plot, right? Then what are you doing? You're directly going and saying, yeah, here I made 1 CR, right? Give me this piece of land, right? So you're buying a plot. So you're buying real estate directly. So this is direct real estate buying. So REITs people came and they said that, you know what, you're a faltu fund hai, right? 1 crore, where will you put, right? Do you guys know how to invest in real estate? So you'll say, okay, no, I don't know, right? So then what they will say is that, see, we will fractionalize everything. So fractionalization means that instead of 1 crore ticket size, we are going to chunk this up into 10 buckets, right? So you'll create like 10 buckets, and each of these shares will now cost only 10 lakhs, right? So 10 lakhs into 10, that is 1 CR. And now you get an option of investing just 10 lakh rupees, right? So aisa kar karke, now you can invest just with rupees 500 on a REIT, right? And these are listed entities. You can go and invest in stock market via REITs. अब लोग खुश हो गए कि दिवाली आ गई और कि REITs आ गई, and with just like 500 rupees, we'll become like Malik of real estate. Right now, just use brain. Okay, it's very simple. On one hand, you're saying that, you know what, the real estate will give you 10% return. Now here there is a party in the middle, which is REITs. वो भी तो अपना कुछ पैसा कमाएगा, right? So 2-3% they might charge, right? Management fee, this fee, that fee, whatever it is. So जब underlying asset में, in the underlying asset itself, here, if the return in white money is coming out to be, let's say 10%, right? You are going and buying a listed asset on it. How can it give you like 12% or 15%? Does it make any sense, right? The answer is no. Of course, I'm simplifying it. There is an entire video that I've done on REITs. In case you guys want to watch it, you can watch it, understand the entire argument. I'm just telling you that people don't understand the full story, right? It's not as if that real estate investing is bad. In fact, real estate investing is amazing. I have made a lot of money investing in real estate, and every single real estate that I own generates a rental yield of 6.5% minimum, right? So that is how much money I'm making. In fact, I'm doing a real estate workshop also. In case you guys are interested, I'm doing that physical workshop in Goa. It will be combined with 3 classes. Right? It's fine. You don't need to invest in every single thing that is trending and all that stuff. So then comes the next point, that if you're a salaried employee, then you make certain kind of rules, right? And you never take bulk buying opportunities. So for example, when we are going to office, 8 baje uthenge, breakfast karenge, right? We'll go to office this day. So it's a routine, right? Similarly, we make investing a routine. Ki bhai, hamari 1 tarikh ko tankhah aayegi. Then by 5th, we'll have to do SIPs in these 5 mutual funds and be done with it. So please don't mechanize it. It's not automatic. You will have to use little bit of brain at least, right? I'm not saying that sit in front of computer, gawk at your screen for like 10 hours, read like 100 research reports. No, nothing of that sort. At least basic pata hona chahiye ki when there is an opportunity, aapko dikh rahi hai ki samne opportunity hai, it's free money on the table, grasp it. That is called as bulk buying opportunity. Can I give you example? Yes. So this is a video that I made a few months back when the Nifty was trading at 15,500, something like this. I took a Nifty position of roughly 50 lakhs. So bulk investing, right? I took that. The index is now at 20. So free forgot ka return tha, right? Why? Because that was a great buying opportunity. It was a bulk buying opportunity. Now, very recently, like maybe 1.5 months ago, I built bulk position in Nifty IT. I invested close to 1 CR in Nifty IT itself. It's up 10% in 2.5 months. How much risk did I take by investing in Nifty 50 or IT index? Very similar. Now you might say that, okay, now you're qualifying gade murde, right? And all these things are in the past. Tell us the future, right? So, okay. So guys, please use brain that right now there is a bulk buying opportunity in banks. Go and check any bank, HDFC Bank, Kotak Bank, ICICI Bank, this bank, that bank, or at least good ones, right? Not every single bank, but good banks. You'll see that they are trading at their lowest ever P. They are sitting on their highest ever revenues, highest ever profits. Why will the stock price not at least go back to its previous high? Slow down ho jayegi growth mein, competition aa jayega, all that stuff is there, no doubt, right? It might take 3, 4, 5, 6 months. I don't know how much time will it take. I cannot guarantee that it will 100% bounce back and all that stuff. But the risk reward ratio is very favorable for you. So these are the times when you could consider building some bulk buying position as per the market dynamics. I'm not saying that do bulk buying in Nifty 50. I'm saying that potentially you could start pouring little bit more money on banks as of now because it will improve your returns, right? So that is a simple point and simple message. So I had done an entire banking video. You could consider watching it. It will give you more idea. You research more, and then finally you can consider building some positions. But to cut the long story short, please understand the concept of bulk buying. That's a very effective way of improving your returns. So then comes the 6th point, that many of the salaried class people, what do? They create an EMI. Ki naukri lagi hai nahi of 2 lakh rupees a month. And Hyderabad mein I'm getting a house of 4.5 CR.
So now khareed lo. Now why? Because mama papa is asking me to get married and all this stuff is happening and I'm being pressured. So I will go and buy what? Not a house, but a EMI. Okay. So I'm not saying that whether you should be buying a house, not buying a house, that is your call. I cannot guide you on that. But see, what I'm trying to tell you is that if at any stage in your life, if you're over leveraged, now over leveraged means that if you are making 1 lakh salary and your debt or the debt repayment that is happening from your side is like 60, 70,000, 80,000, then you're almost 80% of your salary is going into paying debt. You yourself think that is that a sensible thing to do? I'll say, kaun karta hai, right? Lot of people do it. Lot of people create these type of EMIs, which puts a lot of financial strain for you. See, when you're in your early 20s, early 30s, even mid 30s, there are a lot of opportunities that you can take advantage of. So from that perspective, do not get yourself into a situation where like more than 50-60% of your salary is going into paying debt. That is just a very bad way of doing any kind of investing, right? So that's a simple point that you should understand. And I hope that you will see that in the right spirit. So then comes the 7th point and the funniest point, that I will invest the way my friends are investing. Now see guys, your friends might not know much about investing either. So it's like blind following a blind. It's a phrase. So because of like social pressure, a lot of people just randomly buy stuff, right? So I get to talk with a lot of my friends and their point is, you know what, Dubai mein makan falana dhinga khareed raha hai, I'll also go and buy Dubai mein makan, right? That's not a way to invest. Invest in something that you understand, something that makes sense to you. Now, why is that the case? Because any type of investing that you do, you need to have conviction in it. For example, today you got impressed, yeah, Akshan ne banks bole, I'll go and buy banks. Now, if you yourself do not have any conviction on banks, and kal ko kuch news aa jaye that the banks have fallen by 5%, 10%, is that, you will panic, right? You will not understand what is going to happen. You will not be able to downward average your position. So downward average means that if the stock falls a bit, then you are able to buy more of it. So you're not able to do any of these steps. You just get scared. So unless you yourself have conviction, please do not go by what your friends are doing and all that stuff. Investing is an individual game, not a community game, that our community is going to invest here, so I will also invest here. No, that is not the right way of approaching investing. Okay, so that brings us to point number 8, which is a related point, which is called as trend chasing. So now let me tell you a quick story of Suzlon Energy and I will show you the chart. You will like it. So see, this was 2006, right? And during this time, there was this news in the world, and you can go and check with people also. And people were saying that, what, dunya mein tel khatam ho jayega, right? Oil will vanish from earth because there is limited amount of oil. And that's it, right? The humanity will run out of oil. So the renewables is going to grow. And because renewables is going to grow, if you pick a company that is into renewable energy, bhai sahab, you are going to make like crazy amount of money. So that was what Suzlon's energy story was, and it did well initially, right? And then ab tak to tel khatam ho jana chahiye tha, right? And it was at what, right? It was at 355. Now what is the stock trading at? It is trading at 15, 18 rupees. So halat buri ho gayi renewable energy mein. Now similar trends are being talked about here. EV aayega, right? Okay, ye ho jayega final, artificial intelligence, machine learning and whatnot. See guys, I'm not saying that these trends are not going to change the world. Of course they are going to change the world, but I don't think that we are smart enough to identify, okay, this company is going to do this particular thing in AI ML. Now, many of you would say, Acha, then why are you betting on AI based companies? This, that. See, I'm taking broad bets. I do not make like these specific bet ki falana dimka company is going to become like AI leader, ML leader. No, nothing like that. I have taken my broad bet on top 4 or 5 performing American firms. So I am a thematic macro investor. I do not look for needle in a haystack. Now, trend chasing is the fastest way of going bankrupt, that you'll listen to your friend. Your friend says, you know what, Dubai mein bahut chal raha hai aajkal real estate ka, so I'm going to buy like an apartment in Dubai, right? Then some third person is going to say you that, you know what, sarkar ye roke lagane wali hai on this particular thing, so we are going to buy like this domestic company, this, that. So please do not do this trend chasing. It will just bankrupt you. So let me tell you something interesting also. This comes from Twitter. I just posted today. So this was yesterday's news on Tata Consumer Product, right? Every major news outlet, media organization, it started posting on Tata Consumer Product. Aap news channel dekh lo, same thing. This stock was being, I'm scared to use the word manipulated, but we use kar leta hu, right? So in a way it was manipulated, right? So the retail investor loses money by chasing these type of trends. Please do not believe in it. Please do not believe the news unnecessarily. Learn how to analyze. Don't just simply chase the news. So point number 9 is that salaried class people do not consider a portfolio of income and portfolio of stocks. This is a very important stuff. See, you cannot forever continue to invest in mutual funds. So it's very important to learn how to evolve as an investor. You can start definitely by investing in mutual funds, picking Nifty 50 yourself, then investing in indices, then picking blue chips, then picking small cap, mid cap. But please understand that you will go through a journey. This is a very important aspect. Now, why is it important to learn how to invest your own money? Well, it is critical because your level of income will keep on changing. There will be times when you will see bulk buying opportunity. There will be times when you should not invest much in the stock market. So you will be able to intelligently time all these signals only when you learn your own portfolio building and learn how to invest your own money. Without that, you will not get much ahead. So as a final point, what I will do is that I will leave you with 3-4 key tips if you're just starting out or if you're somewhere in the middle of your investing journey. So the first key thing as a salaried class employee is that you could start out by investing in Nifty 50. If you have never made an investment, that's a good way of starting out. Nifty 50 is a safe-ish instrument. It's not as if that entire Nifty and India economy will become zero. So Nifty 50 will also become zero. So that is highly unlikely to happen. So if you're starting out, start with Nifty 50. Number 2, then graduate towards buying blue chip companies on your own when they are available at discounts. So for this, please continue to tune into my videos. If you want to learn fundamentals of stock markets, all that stuff, then please consider joining my member YouTube community. The feedback has been excellent. 1 महीना join करके देख लो. Just try it for 1 month. It's a subscription